This video is about three peaks, and it's about a gap down situation in the middle example. And the three peaks don't all move obviously like the gap down example. Hence the comparison that we're going to be making. Originally, I did this same indicator in a video called the 21 identical indicators. And as you know, there's 22 market force recognition indicators, and there's 21 of them that are obviously in an identical pattern. And I'll switch over to the charts. In this example, in the green vertical line right here, this is where the stock gapped down $8 and then went down $2 more. So we have a $10 gap, or a $10 movement on a $32 stock, which is pretty huge. The four vertical lines, the yellow, green, and red are on a peak, and the blue is at a bottom, just so that you understand where the lines are. And this is in MEDP. That'd be Mary, Edward, David, Paul, and we're in April and May of 2017. In case you want to follow along, which I highly encourage, because sometimes the visibility of what we have on the YouTube is not, you can see it much clearer on the platform than you can on the video. That being said, I'll start out by saying that we have three what appear to be three different peaks, obviously. And they all have strong up movements if you look just at the price chart. The yellow is the right peak, the green is the middle peak, and the red is the left peak. And you can see also by looking at the candles, the red one gaps, or excuse me, actually the height of this one is actually on this day. If I move the red vertical line over one day, that would be the very height of it, and that goes down a couple dollars down to the vertical blue line, and the yellow line actually goes down one day and then just kind of moves itself up after that. And so or I guess it goes down a second day. The green candle is underneath the red, but anyway, 2 or 3 days later it starts back up. Now, and with the exception that the price red and green are a little bit lower than the other two peaks, we would think that we're going to be going down on the yellow vertical line. I mean, it looks good. If you look at the ZIP chart, you've got ZIP green and Zion at 100, and ZIP pink is right underneath it. In this case here, ZIP Zion, like I say, ZIP Zion and green are at 100, pink is at 97.3, and gray is at 97.6, and red is at 96.4. So, in other words, the order is the green and Zion, and then the gray at 97.6, and then the pink at 97.3. And that is a little abnormal from what we normally see. We almost always see the pink right underneath the green. I mean, obviously Zion can be at 100 and pink and green can be at 100, but the pink is the next highest line for the definition of a pink-green top. And that's what we're really looking for when we find peaks. We like to see pink-green tops because ZIP green tracks buyers in and out of the market. When ZIP green is at 100, it tells you that there are a lot of people buying the stock, and Zip Zion is the grandfather to that, and it tells you that the Zip and it moves slower, and when Zip Zion is at 100, there are a lot more people buying the stock. Vice versa, when they're both at 0, then there are a lot of people leaving the stock. Now, the red vertical line has Zip Zion at 100. It has a Zip Pink at 97.9, and then Zip Zion is under that, pretty much flat, with the other blue, red, gray, yellow going down like you normally see on the first turn of a downtrend. Now, the thing that I'm going to point out now are the ideas of the vertical green line and why it gapped down. And I'm just going to do this briefly. As I mentioned earlier, go to the 21 identical indicators for an in-depth comparison here. But just briefly, what we've got here is price green and red. Price green's at 147, and price and red is at 135. So those are both very high, but they're in bottlenose up. And along with that, you have the blue, and then the other. Remember, or if you don't, or if you're not familiar with it, please understand that there is to obtain a gap up or a gap down. It requires 3 patterns to have certain conditions, and those 3 patterns are, first of all, what we refer to as the identical patterns, and they typically come in a 1 pattern or a 2 pattern. The 1 pattern has a majority of market force indicators, and 12 out of 22 is a majority. So we like to see 12 out of the 22. You can go down to 10 and you can still have gaps. I think I've seen them at 9 even, but there's other extenuating circumstances, and that being that there are multiple patterns in place. And so the 2 pattern, however, if you have 9 in one and 5 in the other, then you have 14 patterns that would tell us about the pressure inside of the movement. Now, the other one is the down touch in the trend chart. And remember, 75 to 85% of the down touches occur in the trend chart. The best line to down touch is trend red, and the best line to be down touched is the trend pink. Trend red, green, and gray do the down touching. They're the faster lines, and trend yellow, pink, blue are the slower lines. They are also one group in the 3 groups of the short-term trend lines, and all of the other down touches occur on the short-term trend lines, or on 0, or what we refer to as the 5th possibility, and that's under 0. Now, there's no specific down touch line. It's just that it went down under 0. The variations go from right next to 0 to real deep, 20, 30, even more points deep on the trend red, down touching underneath 0. Now, the proximity group is the 3rd group in the 3 pattern arrangement for gaps up and gaps down. The proximity group has 5 lines that we look at. The power 4 are the pink, blue, and the white and the yellow. Those two are paired to, or those, the pink and blue are paired together. The pink and blue are both deep cycle indicators, as well as swing gray. Swing gray is the best deep cycle indicator, and when it turns around and goes the other direction, the cycle has definitely ended. The swing Zion is the 5th line with the power 4 that we watch in gaps up and gaps down. One of the best forms of a gap up is with the power 4 above 0, with Zion underneath power green and orange, primarily underneath the orange, and with power green and orange going up, and obviously when that happens, green is above the orange. And the other thing is that the orange and the green are really close together. I mean 0.03 or 0.07. We try to stay in that 0.15 area, but when you get real strong movements like you have here, then it will get above. I'll point that out as long as we're on it right now. Power orange is at 0.31 and power green is at 0.63. Now this is 10 times what you normally see at 0.03. So because those are 0.32 apart, and it's usually 0.03 or up to 0.1, but this is really strong, and we like to see this, and obviously when this happens we have a significant gap. Now those are the what's defined as the three patterns. I'll also point out on the vertical green line, by moving this over 1, that zip green has pinpointed, went back up to 100, and zip pink is right under it. Again, that's the rule for the pink green top. Zip green is at 100 and pink is right under it next to it. In this case here, zip pink on the day before was at 95.87, and it was actually the highest. Was zip yellow was 94.8, so it was about 1 point under it. It's pretty hard to see there. It's stuck whenever zip pink sticks its nose out from underneath the other lines, then it typically goes down the next day. However, if you take the green, I'm going to move the green vertical line to the day before the actual peak, and there we see, right down here, we see a bottlenose in the green pattern, in the green zip green line. We actually have two movements simultaneously taking place here. A bottlenose down is a reversal pattern going up, and a zip green down touch the 50 is a reversal pattern bouncing back up. Zip green right here was at 52.5, and usually if it's within 3 or 4 one way or the other, it qualifies as a down touch. And so we obviously know that the day before the peak, that this was not the peak, and we could easily identify that with just looking at the zip green chart. The zip green line, indicator line. Also, if you understand the formulas behind the zip green and the zip Zion, you know that you discount the one for the other. And by that I mean when they're both lowest, either one can be counted as beneficial for the movement. In this example, I'm saying that zip Zion is the lowest, even though zip green is the lowest, and because they're both tracking buyers in and out of the market, it's not one of the typical market force power or market force pressure indicator lines that we identify with. And so what do we have? We have a zip Zion lowest, which means that price goes up. So just right in there, just on the zip chart, you can tell that next day it's going to go up 2 days or the day before the peak on this movement. And obviously price green and red are up high as well. And when they come down, like right here on this day here, the price green has come down to 133, red's down at 119. When it comes down like that, it usually goes back up the next day because those lines stayed up so high. If you go over here, for example, right next to this red line, it went down. Zip green is at 120, zip red is at 97, and it goes back up the next day. Although it doesn't go up, it goes up very little, obviously, but you get the idea of what I'm trying to convey. On the following day, 2 days after the red line, you then have a lower high, and that's the definition of a downtrend. And so bingo, we have a downtrend. We also have ZIP Zion highest right down in here, and likewise we have the ZIP yellow and the power yellow, although it'll be the next day before they are highest. When they're highest and going down, you're in a downtrend, and they continue until the blue line in that downtrend. The key factors inside of this thing, if I move the vertical green line up over to the day, the key factors here are, number one, the ZIP green went to 100 and pink was right underneath it, and the other four lines, red, gray, yellow, and blue, were all down. That tells you that it's going to go down the next day. The second major indicator inside of this thing is that power red is highest and in a high M pattern. It's about 7 or 8 days long, and you can see that the peaks of the M are flat, or so to speak flat, but you get the idea of what I'm talking about. The only other area that you really see that is in the price chart, and then over in the swing pink over in here you can pick that up. We used to think that we used to look at that as 2 days of low angle down, but in reality what you've got here is a 2-day TOC in the power red and in many other indicator lines. Also, by the way, I'll just point it out, there are 21 indicators that are here, but there are 7 in a bottlenose up, 7 in a BOC higher pattern, and 7 in a 2-day TOC pattern. So this is one of those that qualifies or that we see that is greater than a 1 pattern or a 2 pattern. If you looked at it from a 1 pattern perspective, you obviously have only 7 as a high, but in this case here you got 3 at 7. So what that is telling you also that when you have 21 indicators in a identical pattern, in a 3 pattern grouping like that, you have 21 out of 22 that are used up. So you can't really identify with any more than one more indicator line that might support the evidence that you already have within the identical indicator pattern. And although there's other evidence in the other 2 types of patterns, but you're not going to get any more there because you literally can't get any more but 1. So the other thing I'll comment on is that your power 4 are all above 0. They are above 0, but the more important thing is that they're above the orange line. And as you can see, ZIP Zion just crossed over the orange line on the green vertical line day, and it's still underneath the green. That happens quite a bit, and that's an indication for a stronger movement. And with power red highest, that's also an indication of a stronger movement. If you notice in the yellow vertical line and the red vertical line, power red was not highest, and that's true with other when you analyze other comparisons. One of the next thing that I'll tell you quickly is that swing gray over in the red vertical line was at minus 0.8. On the yellow vertical line, swing gray was at minus 1.8, and on the green vertical line, swing gray was at 1.36. So in other words, when you're looking at a downtrend, to have it high and positive is where you want to be. And the vertical red and the vertical yellow both had negative swing gray lines. And the swing gray is your deep cycle indicator. It tells you when the cycle is going up or when the cycle is going down, and how powerful things are when it's above 0 or under 0. So that's the last thing that I want to point out is that the divergence that occurred within this thing. If you look at the big three, trend red right over here is high, going up. Zip Zion, I said that wrong. Swing Zion is the other big three member, and that's on a low angle up. And both of these low angles up are telling us that it's going down the next day. I mean, you got that here, you got it over here in the yellow vertical line. On the red vertical line, you got low angle up in all three price lines. You got green and Zip Zion and pink in low angles up. I'm going to check. Zip Zion is at 95.66, and on the red vertical line day, Zion is at 95.69. So it's a low angle up just by 0.03 of a point. And and so that tells you that there's a downtrend. But in this case here, obviously it was slow to go down, and it only went down a couple dollars in about 8 days. So it tells you the truth, but you also had power's pink highest, which tells you that you're typically going to go down as soon as you see the TOC, which would be the day after the red vertical line. But in any case, you got the divergence. The power red on the red vertical line is down. Trend red and Zip Zion are up. That's divergence in the big three. And if you haven't heard me talk about the big three, when they're all highest and you get the signal, like in this case, 2 out of the 3 are telling us that it's going to go down next day, that's pretty much the peak. The other thing is that swing pink and swing gray are in divergence on the let's see, wait a minute, on the red vertical line. Swing pink and swing gray, one is up, one is down. If you look at the yellow line, one is up and one is down. And when you look at the green line, swing gray is higher, and the pink, although not highest, is higher. But they're divergent from the fact that pink is not highest, but not. That's not the. There could be other types of divergence, is what I'm trying to say. The other one is your power pink and your power blue. If you look at what power pink is doing the last few days, it's going up, and power blue is going down. So there, with blue going down and pink going up, you've got a real divergent situation. Also, I'll point out that your power 4 lines, your power yellow and white are in a bottlenose up, whereas your pink and blue are in a BOC higher pattern, which is that's not really divergent. It's just that they're 2 different patterns within the power 4 pointing up. And then you have Zip Green and Zip Zion that are in divergence on this particular one. Zip Zion is in a 2-day TOC pattern, up, down, down, and Zip Green obviously shot up to 100 on this last day. And then you have the third one is 3 lower highs in your in what we refer to as price divergence. Now, let me explain what that means. In your trend chart, whenever you have a lower high, like this line right here on the trend chart is a lower high from the previous peak, and that's the definition of a downtrend. And then a third one on the green line is 2 lower highs from the peak, which says it's going to be a downtrend. But the candles have been going up, and so the price has been going up while the indicator lines have been going down, and it tells you that this thing is going to drop. You cannot see this from the candles, but you can see it from, in this case, excuse me, in this case, the trend red line. Also, one final thing that I'll point out, and that is, just like your fifth spot of your down touch that makes the qualification, like for example, red is a down touch underneath 0 at maybe minus 15 or something. Well, the opposite is true as well. In this case here, red, green, and gray are all up above, and they are obviously above 0 and above the trend trio lines. And so that's the fifth area where we call it an up touch, and it's, you know, you have to get used to seeing these things because you're not going to think of that unless you look at it. But yeah, that's your qualifier, because remember, in your 3 patterns, gaps up or gaps down, every single one of these has to be working in order for a gap to occur. You have to have the 12 or more identical indicators in either 1, 2, or 3 patterns. You have to have the proximity group in a pattern, and I don't think I mentioned it on this video, but I'll quickly mention that there are 7 different patterns within the proximity group that qualify as a arrangement that the Power 4 and Zion will work as a gap. And so and you can find those in your proximity group document or in other places. Those 7 patterns is what I'm talking about. And they're basically 1-day and 2-day BOCs and 2 TOCs and those type of visual shape patterns. So that's it for this video on comparing those 3 peaks. They all had real high Zip Zion lines, and just identifying the peak. 2 of the 3 were like near or above 3. I didn't point that out on this video, but that's key in going down. You want to have Zip Zion real high. Because why? Because Zip Pink, Zip Zion, and the 3 price lines, especially red and green, are real high. And price red and green never get over 150. So when they're at 147 or 145, the possibility exists that they're going to go down strongly. You just have to find that signal that identifies it. Like, for example, in that price green signal, we had a bottlenose up pattern. And that's a key pattern. And obviously we had 7 of them inside of the charts that in that last example. So it's exciting. I am amazed at what it does. I've said it before. I am thoroughly just awed sometimes at how the things work together. One of the key things was that pink green top. You had that pinpoint green that came up, hit 100. When you have pink right under it, it qualifies to go down. That is not necessarily a signal for it to go down, but normally when it's down, 20, 30, 40 points lower, and then boom, it hits 100 and pink is right there, that's usually what we refer to as a pinpoint pink green top, which means next day is going down. So that one right there on the green vertical line was the key, along with the high M power red being highest, and we had that high M pattern with and of course everything else that you had going on that day with 3 7s in the identical indicators, and then the up touch in the air of all 3 red, green, and gray lines up touching past the trend blue, or above the trend blue lines. So truly amazing. I think you begin to see, I made a lot of comments on this video about different aspects of what's happening when, and Watch the Zip Zion line. When it's lowest and going up, you're in an uptrend, and Zip Zion has power, recognizable power. And what's that power? It's buyers coming into the market. And when you buy the stock, price goes up. So identify what these lines mean. Memorize which ones are price barometers. Memorize what Zip Green and Zip Zion does. And there's just a number of other patterns there. A number of other indicators that give you insight into what the market is doing at that particular point in time. So enjoy, have fun trading. It's truly a sensitive system. I mean, when you can see trend red in a having two peaks and both of them are lower than the other one, and the candles are going up, we call it price divergence. And there's other forms of price divergence, but that's one of the key ones. And you know things are going to just boom, go opposite, opposite direction. You just have to find the signal because it's going to go down. I'll see you on the next video.